Hello, hello, Alibaba again. I mean, you cannot stop talking about this company, can you? So today it's down again. It looks like it has a little bit of a downtrend this past 10 days or so. In the last month, in the last 1 month, we had this massive increase. It was about like 37% or something in that huge day. And then it crept up higher for a little while and then actually went down again. And as I mentioned in one of the videos that I made during this period, I wouldn't be surprised if it retraces back to 100 or less, because that's what happens when there's like a significant downtrend in the overall price of the stock. And as you can understand, when we're having a downtrend that has been a long-term downtrend, you can have internally you can have some small uptrends, but typically and generally speaking, the downtrend will change if we have a steep increase in the price of the stock. And as you'll see here, if you go in the 5-year chart, this is still going down even with the massive increases at times. This is still having lower highs, lower highs, lower highs, lower highs, pretty much always. So it's still a downtrend, and in order for this to change, we need some important news pieces and some important sentiment shifts to happen. And we do need some catalysts. Now, this will potentially come when China provides some data to the US. That could be a reason, or when they stop, isolating people for no reason at their homes, things of that sort. So this can actually help the market actually do better in China and propel the stock upwards. But till that happens, you could expect this kind of massive increases and then a little bit of down tracing and then massive increases and a little bit of down tracing. I wouldn't be surprised to see that at all. I have seen it many times with all sorts of different stocks. Happens a lot, and it can go down more. Now, I do think that this is a massive buying opportunity again. Definitely, in my view, this is a great buying opportunity. I would buy if I didn't have quite a lot already. So, but what I wanted to examine, and in this video we have already examined the financials many times, but I wanted to take a look at an article which I think is very interesting. And with this article we're going to examine one of the important things that Warren Buffett has mentioned. It's an interesting rule that you can actually utilize in your investing decisions as well. And we're going to start by taking a look at this news article. And you will see that the author here talks about Alibaba pretty much and Warren Buffett's 10 times pre-tax rule. He does say, or she, I should say, I don't know if it's a man or a woman who wrote the article, but they say that Warren Buffett uses 10 times pre-tax rule, which means that he likes to buy companies that are trading at 10 times pre-tax earnings. Now, the author claims that, but is that really the case? Has actually Warren Buffett been quoted to say that? Now, you may be thinking that this is just, some sort of fake thing. But I actually did the research for you, and I will actually show you when he said it, and I will show you the exact transcript. He did say it in the 2012 Berkshire Hathaway annual meeting, when he was asked, how should we think about valuing the operating businesses, the insurance companies, and the float? And he did say here, different operating businesses have different characteristics. We would love to buy operating businesses that have similar characteristics at 9 to 10 times pre-tax earnings. So he did say that, and it does make a lot of sense. Now, the article here, as you will see if you actually read it through, and I'm just not going to read it through, it's going to bore you probably. It does say a few things about the downside being protected by Beijing's vows to stabilize the market and all that, but they do mention at some point that it is currently for sale at around 7 times pre-tax earnings when adjusted for its cash positions. And they do add the cash positions because they are significant, and it does make some sense. But what does that mean, and how can we actually derive this number? How is this number actually calculated here? And of course, I don't have the exact time the author actually calculated the number, but I will actually go back to R2 here, and what I'm going to do is I will take a look at the income statement. And I have varied this line, of course, because this is a very interesting line. Earnings before taxes. You will see that it's 25.2 billion here. Now, 25.2 billion is what the company actually achieved in 2021. Now, the author could be counting the last 12 months or so, but I'm just, for the sake of the example, I'm just going to be using this one here, 25.2. And now the author just multiplied that, let's just say, by 7 over here. Let me bring up a calculator to do this calculation. All right, so I have it here. So let's do 25.2 billion and multiply that by 7, which is what the author claims. So if we do that, we're getting 176.4 billion. And the author also adds, remember, the cash reserves that the company has. So again, the tool actually provides that information for you. And it is here, cash at the end of period, 54.25. So if we add that plus 54.25 here, we're going to get $230.6 billion. And that's the expected market cap with a multiple of 7. And so if we go back to our stock analysis chart, it actually tells us what the current market cap of the company is. You will see it's 260. I'm assuming this has to do with the different time the author did the calculations, or maybe he's using the 12-month period and effectively is a little bit higher here. But it's very, very close. It's actually 7 to 8. It's probably about 8 right here. 8 times its earnings before taxes, 7 to 8 times. Of course, that changes as the market price goes up and down. But this is what they meant here with this article. And as you can understand, and you'll see here, you have already seen, we are at the 7 times pre-tax earnings when Warren Buffett actually wanted to buy at 9 to 10 times pre-tax earnings. So how much better can this get, really? I mean, it could. If the price keeps going down, it could get better. Why not? But as you can understand, right now, the company's stock price is very low, and we have, of course, examined that in details. And I do like to take a look at the price to free cash flow. Plus, we do have the thing that the company is going to be buying back shares and effectively actually making our shares more valuable. So, to my eyes, I just cannot really see how things can go wrong unless there is something completely unexpected, and for some reason Alibaba ends up getting delisted. I seriously doubt that. But or I don't know, China takes over the company. I don't really know what could actually go wrong in the long term. Now in the short term, many things could be happening. There can be lots of discussions and lots of doubts. And this is when I love to buy, as I've said before, because when people are scared, I'm not scared. Because as long as the numbers align with what I'm saying and what I want to see, then I don't care about what's happening in the surrounding areas, in the surrounding news, really. And this is why I wanted to make this video, because it is very, very easy for people who have bought higher to panic here and be like, okay, maybe it's time to sell, maybe it's gonna get delisted, it's going down, and Charlie Munger sold. But Charlie Munger didn't sell his whole position. Plus, he's not the founder of the institute anymore. He has stepped down, and so it may have been a decision from the board or the new founder, the new chairman, sorry, not founder. So keep these things in mind. There are other reasons also that this could have happened, and they have been pointed out by our subscribers as well, which they really understand things, and they also mentioned this as a possibility. The fact that they may have received a margin call. It's possible for sure. Or it is also possible that they may have switched to Hong Kong shares. Maybe they actually sold to buy there. There are many possibilities, and we don't know exactly unless we get the exact reason from them. But the thing is, they still have a very, very sizable investment. And it's actually more than what it was a few months ago. It's just not 4 times as much. It's like 2 times as much. So, it's still more. And so they still own quite a lot of the company. And so regardless of that, and regardless of whether they own it or not, personally, based on what I'm seeing here, I just cannot avoid saying that the company over here looks great to me. And I wanted to mention this article again, and also point to what Warren Buffett has actually said, and to tell you that this is true indeed. Because again, I don't want to be mentioning fake things. And so this is what I wanted to talk about in this video. Let me know what you think about Alibaba. This is going to be a series with many episodes. This is probably season 1, and it may be on Netflix soon. Who knows? This is definitely a show what's happening with Alibaba right now. But personally, as I said earlier, I'm not scared about it in the slightest. So thank you for watching the video. I hope you enjoyed. Please remember to subscribe and like the video. If you're a subscriber, you will be one of the first people to know how to get access to this tool, which is probably going to be available in about a month or so. So you may want to stick around. And while you are here, take a look at this video that I made earlier. And in this one, I'm discussing Wynn. It's a very, very well-known resort and casino, which is interesting as a potential cyclical play. Thank you for watching again, and I'll see you soon. Bye-bye.